It is almost exactly a year now since the trade wars broke out, mainly between China and the United States, as you know, but also other regions and nations such as Canada and Mexico and Japan and the European Union. Now, fourth quarter earnings for 2018 are coming out now, and for the first time, I think, we're really beginning to see the level of damage done to US corporations by these trade wars. On Monday, the heavy earth-moving equipment maker Caterpillar saw its biggest earnings miss in a decade, and it issued a pretty weak forecast. Caterpillar shares slumped 10%, dragging down the Dow, of which it is a major component, and Caterpillar blames sales slowing down in China, not helped at all by the trade war and uncertainty. Now, on the same day, another bellwether company, the California-based chip maker, the high-end graphics chip maker, NVIDIA, said sales of video games in China were slowing, blaming declining consumer confidence. NVIDIA shares dropped some 14%. On Tuesday, the conglomerate 3M, which makes fiber optics and post-it notes, among other things, was more upbeat about trade tensions, but it still lowered its guidance, all the same, a little bit for 2019. The cycle maker Harley-Davidson was hit hard by the Trump tariffs. It had its profits for 2018 wiped out in the final quarter of the year. Harley has been threatening to make its bikes overseas outside the United States because of various tariffs imposed on its business, upsetting President Trump, as you know. And then there is Apple, the firm everybody has been waiting to hear from. It's so exposed to China and trade war issues. Now, despite a profits warning that sank the markets weeks earlier, the numbers when they came out were actually a lot better than had been expected, with its services division rising 19%, making up for a slowing in sales again of iPhones. But look deeper into the Apple's numbers and you will see the impact of the trade war. Apple sold $5 billion less in China in the 3 months to the end of December. The trade war, the effect it has on Chinese consumer confidence, and the price of the iPhone X are all cited as reasons for the decline. And as late as Thursday, we had a similar tale of woe from Dow, DuPont, and Visa reporting their earnings here in the United States. Now, this week, the markets have rallied on the strength of a dovish tone from the Federal Reserve regarding raising interest rates in 2019, and also corporate earnings. They're coming in lower, but still respectable. The markets have liked that. Imagine what would happen if the trade war issues could finally be resolved. John Terrence, CGTN, on the floor of the New York Stock Exchange.